The results of free day trader education, that's what I want to quickly walk you through in this video, because it is a very, very valid thought on your part if you're just getting started or a beginner in the world of trading. And this could be swing trading or investing too. But okay, what should I do? Should I go and invest into a structured program, a structured class and course? Or is that just the dumbest thing ever because everything's for free on the internet? Why would I ever pay for anything? Which I completely understand that logic. In this day and age of technology, yeah, it's all for free on the internet. But what are the results of kind of going it alone and trying to teach yourself and learn from the very vast world of education and resources out there? And another little disclosure here on my end, I get it. This is one example. So you, from a statistic standpoint, you're completely right to say, Clay, I see the point you're trying to make, but this is a sample size of exactly one. Completely fair point. All I can say is I've been around, the YouTube channel has been around since 2013, and there are a lot of examples across the channel of pointing this out. And I see it all the time, but it's been a while, so I thought I'd bring this one up. And there is a little bit of kind of unique irony in this one too. But let's go through this. I got a comment on a YouTube video, and this is what the person has to say. And this is one of my live trade videos, and they said, one thing I'd recommend though, for the new traders. So let's just establish the premise here. Is this person believes that they are not a new trader, right? They've made an observation and they want to, let somebody else know that, hey, you know what? Based on this observation, for the new traders, because the new traders might not understand what's going on here. Okay, fine, fair enough. They have made a claim. They were making a suggestion that new traders, which they are not, because of course they've made this observation, they should be aware of this. So, okay, well, what should they actually be aware of? And this person says, you risked $60,000 to make that $400. I'll say that again. You risked $60,000 to make that $400. Now, here's my question. What do you think about that statement? Hopefully you're saying, whoa. I see what led this person to think that way, but that's not actually how the markets work. So the big thing here is that, okay, this person thinks that they're not a new trader. In other words, they think that they're much further in their journey than they actually are. And this is a classic example of the Dunning-Kruger effect, which says at the core, when you don't know what you don't know, some of those things include what you don't know. Or, a little twist is sometimes what you think you know is not actually what you should know. What do I mean by that in this situation? Now, the reason this person is making the claim and making the observation is, I don't remember exactly, but I'll assume they're not lying. Yeah, maybe I had $60,000 into a trade. Now I do use leverage, so I don't want to think that, oh wow, you just threw $60,000 out. No, I'm using leverage. But so yes, I'm not refuting the claim that $60,000 was in the trade. The question becomes, but is it at risk? Now, in a very theoretical worst case scenario, yes, it is at risk. But that would imply that if you were to buy a stock and with $60,000, that in the blink of an eye, boom, it would need to go down to $0. Now, is that possible? Sure. In a very bizarre world, you could buy a stock, put $60,000 into it, and then boom, go to zero. Okay, now you lost $60,000. But if you're somebody that's going to operate under that premise, you're probably somebody that should never cross the street, because in crossing the street, even if you do look both ways, you could slip on an acorn, bump your head, knock yourself out, and then a semi steamrolls you. I mean, that's possible, right? So my point here is that, sure, $60,000 in a very hypothetical worst case scenario was at risk, but it's not actually at risk, because that's why you have stop losses that would take you out of the trade before that $60,000 goes down to zero. In fact, way before. And just looking at the number, I was probably risking right around $100 to $200 on that trade if he's saying I made $400. So no, $60,000 was not at risk. That does there is right there. And you probably see how the Dunning-Kruger effect works is that person is not wrong, but they are wrong in a very practical sense, because there's that missing bridge that I just explained right there. And I get it, because when you're not operating in a structured program, first learn this, then learn this, then learn this, then you're going to have blind spots. And I make this guarantee with 100% certainty, this person has a bunch of other blind spots. And now, is this blind spot that serious? No, I think that'd be an over-exaggeration on my part. But it is a blind spot. And when you have blind spots like this, and this is a very typical one. In fact, I've done an entire video explaining this in more detail, but because I understand why they would make and have this false understanding. But the market is filled with all sorts of these little examples. And you get enough of these little examples and these little holes in your boat, it's going to sink. And some of them are not as innocent as this misunderstanding, as this oversight. Some of them are going to be very bad and they're going to cost you a whole lot of money. Now, I understand that I really have no credibility in making all this because, yes, I do sell a program. I do offer a course. So you're completely justified to say, Clay, the only reason you're saying all this is because you want me to buy your stuff. And yeah, I'd love for you to buy my stuff, but I'm not going to show you where it's at or anything like that. All I'm suggesting to you is whether it's me or somebody else, and if it's somebody else that you feel more comfortable with, fantastic, go with them. But consider structure versus going it alone. Going it alone, your odds are you're going to end up with all sorts of blind spots like this person has. And like I said, to sit there and lecture about, hey, for the new people out there, you probably should have mentioned that. With all due respect, my friend, you are still a new trader. You're not as far down your journey as what you think you actually are. But I understand Dunning-Kruger effect. When you don't know what you don't know or what you should know, then yeah, it's going to cause problems. So just be aware of it and consider it within your journey. And yeah, I'm not going to sit here and say that it's not all for free out there, but in order to pick out all the pieces, organize them in a way that's going to make sense without creating blind spots, it's a very, very, very challenging thing to do. So whether it's my program or somebody else's program, just put some serious weight into considering investing into a structured program, because as you saw here, these are results of the free education route. And just something that I want you to consider. So if you enjoyed this, hit that like button, leave a comment down below. And also, if you're curious more about this concept of risk and what I was talking about, I'll put the link to the video that I did, specifically on this topic down below, so you can check that out in case you didn't quite capture the entire explanation of what I was trying to get at there. So I'll put that down below. So if you enjoyed, hit the like button, leave a simple comment, and I'd love to have you as a subscriber to the channel. So hit that subscribe button. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.